Quick check of the markets now. Tom Piotrowski over at CommSec. How are we looking? How are we looking today, Tom?
Oh, good morning, Pete. We're going to kick off ever so slightly in negative territory. The futures are telling us we'll be down by around 0.1%. So we've really been in a bit of a holding pattern the last couple of days. Yesterday, the market only up by around 0.1%. The positive there being that we've preserved that very significant improvement on Tuesday. You might recall after the RBA decision, the ASX 200 rallied. It finished with a gain of 1.4%. That was one of the best daily improvements that we have seen this year. So markets are now pensive both locally and further afield ahead of some important inflation numbers next week. And that goes a long way to explaining why presently investors aren't really all that willing to chance their arm in terms of buying into these markets at these levels, having recovered quite significantly in recent weeks. So we're just working our way towards those dates next week. And having said that, the Dow Jones finished with an improvement of just under 0.5%. The S&P 500 was ever so slightly in positive territory, and the Nasdaq just in negative territory, down by around 0.2%. Still working our way through the tail end of the US earnings season. Uber shares fell by 6% on a disappointing earnings number. We had Lyft shares, so one of its rideshare competitors, up by 14%, having ticked the right boxes. European markets were generally firmer, although miners were a bit of a blemish in that jurisdiction. So keep that in mind today. That would probably be one of the things that is a bit of a handbrake where the local market's concerned. Other outcomes today include earnings updates from the CBA. We'll be hearing from REA Group and News Corp as well. And Westpac will be trading ex-dividend. The Aussie dollar is trading at 65.7 US cents.
All right, Tom, thank you.